it's a new world being built at the same time. And it doesn't need to destroy the old world because we're all going to migrate there. And what we're seeing is that's what network adoption is a migration. You and I have just talked about, well, do we really need a bank account for most of our savings and investments? No. Okay, so you've now, 75% migrated. Okay, that's amazing, right? And you've migrated to another world that functions really well. We're still testing it, but it functions really well. So what happens is over time, people become less reliant on the old world. And this is what people miss about the central bank digital currencies. They're actually making it easier for you to migrate to the new world. And I think that's purposeful.
Welcome back to Wealthy Value. The US government has pushed a total of $9 trillion into the economy since the start of the pandemic. With tax dollars so desperately needed, the IRS is looking to crack down on cryptocurrency. But what if you could trade crypto tax-free? Here's how to do it in 60 seconds. Step 1. Open a crypto IRA account with our friends at iTrust Capital, the world's largest crypto IRA platform with over $3.5 billion in transactions, over 1,500 positive reviews on Trustpilot, and no monthly fees. Step 2. You can transfer your existing IRA, roll over your employer plan, or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. No taxable events mean no complex tracking needed, and security is the best in the industry. All digital assets are held in offline cold storage with the leading institutional custodians, Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link itrust.capital/value in the description below and get $100 in Bitcoin when you open and fund your account.
I've had conversations with the Department of Defense and all sorts of people. They know, they're fully aware of the risks that the leverage has within the system, the interconnectedness of the financial system. They're completely aware of it. So for this to be a way for the system not to blow up, it ends with a whimper and not a bang. So bit by bit, people just move. And so in the end, when it all blows up, we've got a new system. So, my guess is, if we had this conversation in 5 years' time, my guess is most securities will be on the blockchain. Equities, bonds, futures, everything. So then what does that mean? It's like, well, if somebody goes bust, you know who owns what. Central bank digital currencies, they're coming after your privacy. Firstly, that's somebody screaming on Twitter, right? So which has their information. And then they are on a Google browser that knows everything they've ever looked at, everything they've ever bought, everything they watch. Basically, Google knows every single thing that you do. In my house, I've got Nest. That knows, because you come in the house, you put your phone down. Well, the Nest knows what room you're in. It knows, Google knows where you are. So do Apple, anywhere in the world, any time of day. And everyone goes, well, governments and money. I'm like, okay, how often do you use dollar bills? I mean, basically it's to tip the guy who parks your car. That's it, right? So all your bank details are basically available for the government. All of your Google details are available to private people, and you can buy them. The truth is whatever Jamie Dimon says, JP Morgan's scaling crypto massively. They're banking crypto firms. They have, I'm speaking at a JP Morgan event. I'm speaking about crypto. Goldman's doing the same. Everybody's doing it. All the investment banks, all the asset management firms. There's no way you can ban it, and there's no intention of banning it. They kind of get it. And I think, at national security level, they understand it's actually useful. So I think regulation is, the issue they've got is the 1934 securities law. So that is, what is a security use, what's not, then it only allows certain people to have access and others can't. And that becomes a very unfair system because, all rich people get rich off VC and early stage investments, and the average Joe doesn't. So basically what happens is the VCs dump the stock once the company goes public, and many of these don't do well, which is what happened in the SPACs. A lot of them just went down in price. Mm-hmm. So how do you level the playing field? Crypto's early stage VC that's liquid. Okay, great. What you need to do is just give them a bloody warning to say, you're about to do a trade. Do you understand that this is a speculative asset? You can lose all your money. That's what like you do with options. Well, they got all-time record real estate prices, all-time record equity prices, all-time record fixed income prices, all-time record credit price. What is their future expected return? Singapore recently regulated, and they just gave risk warnings. But, you know, because the madness is also in the US is if you have less than $1 million, you're deemed to be an idiot and inexperienced and you can't do anything. But the moment you have that $1 extra, you're now genius and you're able to open the entire financial world is yours. I mean, who makes this rule, right? The reason sorry, I'm ranting now, but who makes these securities rules is that came out of the Great Depression. And what it was a way of centralizing the power within the banking industry because you had to go through an intermediary. The combo, if those are your concerns, then the combo of gold and Bitcoin is actually a nice portfolio. It's actually pretty decent. And you can sit that quietly. Gold dampens the volatility somewhat. Crypto gives you upside. Super interesting. But to talk about how it's taking market share, and it is, because I'm seeing all the family offices allocate outside of gold because of it's just storing it, moving it around. It's bloody clunky and experience in the contemporary age. And like one of my clients for Global Macro Investor is a famous, very elderly, well, in age, not in mind, Italian industrialist. And I mean, he's a gold guy. He's a gold guy. You know, he grew up having to escape the war into Switzerland, across the border from Italy, blah, blah, blah. So he's gold guy through and through. I mean, his crypto position now for the last 2 years has been 5 times out of his gold position. I think this is going to be one of the realizations that a lot of people have, and you're not the first person I've seen to have the same realization, which is you sell something in crypto and you go, well, I don't need to put it in my bank account. And then you realize you immediately flip it into a stable coin. Within 5 minutes, you're earning yield. And you're like, huh. So all of that, I have to go to a middleman, I have to pay them to get access to this product and then that, and the bank takes 3 days to clear. It's like, well, it's all nonsense. Why the hell would you even bother? And I've seen a lot of people go through this. It's like, I just paid my physical living bills using my bank account. But, you know, why bother with have your assets in a bank? I get it. Makes sense. You've basically been given the green right to 1.3 billion people, and Indians kind of understand the value of gold. They understand these savings instruments, and they're, you know, that kind of top 200 million people are highly educated, very mathematical. I mean, Bitcoin's like perfect for them. They're big with technology, and they've usually got friends and family who live in different countries. So the diaspora wants to send money to each other. All of this, you know, you want to send your auntie some money immediately. It's a shit show to send it to India. I mean, I'm half Indian, so I know what it's like. But stable coins, I could send it to my cousin in 2 minutes. You see, particularly the Bitcoin space, what they're trying to do is build their network. I bring as much people into the network because that drives the value up. So what they do is attack anybody who's outside it. You're shit, this is a better thing, right? It's like religion. So that's what they do. So that's why they attack gold. The reality is anybody who's a pragmatist goes, yeah, look, gold's pretty proven. It's useful. This crypto stuff looks like it's potentially a good store of value. It has a lot of attributes of being able to move it around. And it's very transportable and divisible and stuff that gold isn't. So it kind of makes sense. Now, in a pragmatic, ordinary, balanced human being, you'd say, well, I'll probably own a bit of both. The narrative's moved on so fast now with DeFi and NFTs and Ethereum and everything else that really everybody's peeking over the fence from Bitcoin saying, okay, actually, I can see what this is a whole world out there. And that very closed narrative of gold against Bitcoin, it's become less relevant, just simply less relevant. And as you say, the broad-minded gold crowd say, yeah, get this, I'll have some of that. And, you know, anybody I know is a traditional macro investor, you know, they always have a propensity to buy gold because they understand its purpose and value in a system.